I recently made a video on the channel discussing why I own Boeing stock and the reasons that I continue to buy Boeing stock here in 2020, and you guys seem to enjoy that video. So today I want to disclose another stock that I'm buying pretty heavy right now here because I do see a lot of value in this company, and I'm going to go through all the details with you guys in today's video. Now, if you want me to continue this series and talk more about positions that I'm actively buying, the reasons that I'm doing this, make sure to drop a like down below. It really does help out the channel a ton, and we're going to try to get 300 likes on this video. I truly do appreciate that. So the company we're discussing is 3M, and you can see here just in the last 5 days, this company has dropped nearly 10%, and this has me very interested in the stock once again. But what drove all of this selling in 3M apart from the overall market showing some weakness? Well, that definitely did play a big role, but 3M also reported their Q4 earnings recently, and investors were kind of mixed on it. Wall Street was also kind of mixed on it. A lot of people decided to sell the stock, and after really digging into this earnings report, looking through the details of it, I'm extremely bullish on this company, and I'll be buying a ton more 3M at these prices. So here on the screen is a brief summary of their Q4 earnings. You'll notice at first glance things don't look all that great. Adjusted EPS was down 15.6% year over year. Operating margin was down, organic growth was down, and the only real bright spot here was that free cash flow conversion was up, but we'll discuss that more shortly. Since 3M is such a large company, they operate in multiple industries, and here you can see that pretty much across the board they had negative growth. This is with the exception of consumer, which more or less was flat in the quarter as well. This of course translated to total revenue for the quarter to come in at $8.1 billion, and you would expect it to be down year over year based on all this negativity and decline and all this stuff. But funny enough, 3M actually grew year over year by 2.1%. This right here, I believe, is something the market is overlooking, and I think this is something that is key to pay attention to. Here you can see 3M's revenue broken down into quarterly and yearly basis, and what we can see is that this past Q4 was actually the best Q4 in the company's history. That's right, despite all of these headwinds of a recession fear, global economic slowdown, etc., pretty much everything that's been going against this company, 3M just had its best Q4 ever. Now, Q1 to Q3 did perform worse than 2018, but this was because, yes, the global economy was taking a breather. Overall, with all these quarters in the last year, it led us to a decline in overall revenue year over year. However, all things considered, this was still the second best year in 3M's history. But what I really do want to focus on here in this video is paying close attention to this Q4 results, because I actually think that the decline in 3M may have bottomed out. This means that in 2020, I expect this company to actually post stronger numbers than expected and actually grow even more year over year. Free cash flow for the quarter also set a record, coming in at $1.8 billion, which was up 4% year over year, which brings the total cash flow for the company for 2019 to $5.4 billion, which is another record, which is up 10% year over year. 3M is also a very long-term dividend growth company, so they use this cash flow to return value to shareholders both in dividends and in share repurchases. This totaled up to around $4.7 billion of expenses in fiscal year 2019. So this brings us to 2020, and this is where I turn extremely bullish, because what you're about to see does not necessarily justify a sell-off, let alone a 10% sell-off in this company. 3M expects sales to grow by 3 to 5% year over year, which is a modest but still growing number. But the bigger surpriser is that EPS, earnings per share, is expected to come in around 19 to 25% higher year over year, which is a significant bump. This would significantly improve their free cash flow and most likely set more records in 2020, and they can continue buying back share and raising the dividend without any worries as well. And as an investor, this is what I want to see in my stocks. A company that is growing, a company that's becoming more profitable, a company that's bringing more free cash flow every single year, and a company that's returning a ton of value to me as a shareholder. 3M meets all of these criteria. So now that we saw all the figures for Q4 here in a nutshell, it doesn't necessarily justify what the stock price is doing, in my opinion, here in the short term. So why are we seeing such a significant sell-off in 3M? During the conference call, the company announced that they'd be cutting 1,500 jobs across the business, which equates to around 1.5% of their overall workforce. Now, it seems that Wall Street has taken this to be a negative, as it could be signs of more weakness ahead in the business. And while that may be true, after listening to a couple interviews with their CEO about this, and listening to a conference call, and reading their earnings report, the company is expecting a growth year for 2020. And by cutting costs from jobs that they feel are repetitive or not providing enough value, they're doing the right thing for shareholders here. And that is to make sure that they're using their capital as efficiently as possible. So look at it this way: if they're able to grow their business and bring in more money by reducing 1,500 jobs, why wouldn't they do that? Of course, I feel for the 1,500 employees that will be directly affected by this, but this does come at a good time, in my opinion, where the economy is strong, unemployment rates are at pretty much all-time record lows, so they shouldn't have too hard of a time finding another job. So clearly I've laid out a bullish case here on why I'm very excited about 3M at these levels. But many of you know I like to find value in my stocks, especially when I start buying and entering a position. And really this is why in the last few months I haven't been doing a lot of buying. I've just been saving up a lot of my cash and just holding my existing positions, because it's been very hard to find value out there in the market. But now that we're seeing a pullback here in the markets, we are seeing some significant discounts, and I believe that 3M is one of those companies that is on deep discount right now. So now what I'm going to do is actually show you two of my simple metrics here to figure out if a stock is undervalued or not, and you'll see that 3M is significantly undervalued. First, let's look at their dividend yield history. You can see the average yield here for 3M is historically around 2 to 2.5% dividend yield. And when the stock is at that level historically, it's provided fair value to investors. But now looking closely as to where we stand today, we're sitting at above a 3.5% dividend yield, which is near all-time highs for 3M in the last 10 years. And this was really the first hint I got that 3M may be undervalued at current prices at around $160 per share. Now, if you want to understand this valuation metric in more detail, how you do it, what resources I use, I did make a video on this recently, so I'll leave a link to the description below, so make sure to check that out once you're done watching this video. Okay, so now after looking at their dividend yield history, I have conviction that the stock is undervalued. So I'm going to use another metric to kind of justify that or back up this thesis as well. And I'm going to use PE versus their forward PE versus their historical PE and try to figure out if this is also showing us that it's undervalued. So I put a quick table here together, and you can see the current PE for 3M sits around a 20.81 or so. And then I went and grabbed analyst average estimates for 2020 and 2021 EPS, threw that into this, and use that to calculate where we are sitting on a forward PE basis. So for 2020, this forward PE sits around a 17. For 2021, this sits around a 16. Finally, I went and looked up the historical data on 3M for their PE and found that on average, its PE sits around an 18. So the conclusion is that we are undervalued here at current prices. Also remember, this is based on the average EPS estimates. If 3M does better than this, it'll bring down that forward PE even more. Also remember that I'm a long-term investor, so when I look at these forward PEs, the 1-year PE isn't as relevant as the 2-year PE would be, and the 2-year isn't as relevant as the 3-year. But then the problem is once you start getting 3, 4, 5 years out, those estimates are not as accurate. That's why I like looking at the 1 and 2-year forward PEs, because I feel that those are more or less in line as to what the company will actually report, plus or minus a few percent. And really, based on these current calculations, if I buy 3M at these prices right now, I'm getting the company on a forward PE of around a 16, which is cheap for a company like this. And really, that gives me a nice discount on these shares, as well as a 3.5% dividend yield, which is a nice bonus to have with any investment. But really, things can go either way here, especially in the short term. Prices could go much lower in 3M, which case I'll be buying even more shares of this company because that'll bring down the 4P even more, make this even more undervalued. And if we do see a recovery, I'll be holding on. I probably won't be buying 3M above $170 per share, but anything in the 160s, 150s, even 140s if we somehow get there, you can almost bet that 3M will become one of my largest positions in my portfolio. So with this video, I hope you got kind of a brief look at how I look at a company, kind of ideas on how I value them, and after doing my analysis, how I can be so confident in a position and buy the stock regardless of if we stay at the same price or even drop lower in the short term. I personally believe 3M will be back to a $200+ stock in the next few years if things go well in the economy. But regardless, guys, I think that at current prices, this is incredible value, and I think we have a lot more upside in the stock than downside. So I hope you enjoyed this video. Don't forget to subscribe if you're brand new here and you enjoyed this and want to see more videos like this. And remember, if we get 300 likes on this video, I will continue this series with other stocks that I continue to buy in my personal private portfolio. Guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.